Good afternoon. Today we are going to solve question number 10, depreciation accounting problem, which is asked in MBA BCU 2021 question paper. Let us see this problem, how to solve this problem. First, we'll read the question and we'll underline some important note and we'll do the working note according to the question. First, let us come back to the question. A firm purchased certain machineries on 1st of January 2016 for 1,80,000, for which the cost of the machine was 10,000 and cost of installation is 10,000. So the total machinery has purchased at 1,80,000, but additional expenses has incurred 10,000 and 10,000. So now the total cost of the machine is 2 lakh rupees. So this is what we have got the information from the question. Let us go on to the further. What is this question says? Depreciation on machinery. Okay. Depreciation on machinery is charged at the rate of 10% per annum on reducing balance method. So here they are telling you to charge the depreciation at the rate of 10%, which is nothing but per annum. On which method we have to follow here? Reducing balance method. Okay. Next, the accounting of the firm is ends on 31st December. Okay. So the accounting of this firm, it ends on 31st of December. So as we can see, the machinery is purchased on 1st January 2016 at the beginning of the accounting year. So it assumes that if the question is not given the accounting year or financial year, or suppose we can say calendar year also, then in that case, the first date of the asset, what it is given, we will take it as my year. Next, what they given on 1st July 2018, 1/4 of the machinery was sold at 20% more than the book value. So what happened on 1st of July 2018, we have sold 1/4 of the machinery, which was purchased during the year at 20% more than the book value. And another machine which was costing 80,000 was purchased on the same date. Very important. Let us remember this term here. Okay. So now I will take you to the Excel sheet. So this is the Excel sheet I have prepared. I'll first show you the working note, how it's okay. Some basic calculation we'll do before we proceed with the main calculation. First, what has happened on 1st of January 2016, we have purchased the one machine. Okay. The cost of the machine is how much? Including all, it is 2 lakh rupees. This is on the 1st of January 2016. Okay. So let me put here. So 1st January 2016, one machine we purchased, which is costing how much? 2 lakh rupees. Now, afterwards, what happened? We are charging depreciation at the rate of how much percent? 10%. So let me write here. Depreciation rate is how much percent? 10%. And remember, method of depreciation is nothing but WDV method, written down value method. Next one, what happened? Let us go to the question and check what next they are asking here to do. Accounting of the firm year ends on 31st of December. Okay, so every year, so we can say January to December is the year they are following for the calculation. Let us go on. On 1st July 2018, 1/4 of the machinery was sold at 20% more than the book value. Okay, on 1st of July, let us put here 1st of July 2018, what happened? Total cost of the machine was 2 lakh rupees, but they're telling 1/4 of the machine was been sold. Okay, so now how to do this calculation? Let us try to understand. There are 2 times sale is happened in this question particularly. Okay, first machine, it was 2 lakh rupees. Okay, of that they're telling 1/4 of the machine has been sold. So if we calculate 2 lakh 1/4, it is nothing but 50,000, and this 50,000 will be my first part of the machine. Okay, let us write out like this. Okay, so 1/4 of the machine, which is 50,000, is now cost. One first part, this is my cost value. Now this machine, 50,000 machine, has been sold. Okay, we have sold 1/4 of the machine. So let me write here sold. And at what terms we have sold? We have sold at 20% more than the book value. Okay, we have sold at 20% more than the book value. Let us write down here. Okay, now this is the condition which they have given in the question. So what do you understand with this term? 20% more than the book value. Let us understand what is book value. Book value of asset. You know, right? Every asset will have its own book value. What is the meaning of book value? Let us try to understand. See, book value means, okay, total asset value, which is nothing but the historical cost. Okay, total asset value. When we purchase any asset, it has its own historical cost. Means first time, what is the cost? The first time when we purchase any asset, that becomes your historical cost. So total book value of asset, how do we calculate now? So first we should understand the total cost, that is historical cost, minus, okay, minus what? Depreciation. Till now. Till now means if the asset is purchased in the 2016, and if you want to calculate book value at the 2020, suppose, for example, let us understand, if you are purchased any asset at the beginning of the year 2016, some value was there 100 rupees. Okay, and if you want to calculate the asset cost in 2020, so obviously the cost of the asset must have come down. You purchased the asset at 2016 at 100 rupees. Now, if you want to calculate the cost of the asset in 2020, then that cost will be cost minus depreciation value. Okay, so let's imagine the cost presently 2020. If the cost of the asset is, let's imagine 80 rupees, means that remaining 20 is nothing but you have charged the depreciation. That why the value of the asset has come down? Because of the depreciation. Okay, so what is book value of the asset? Total asset minus till now whatever we charge depreciation, that is called as book value of the asset. So historical cost minus depreciation value, whatever the difference you will get, this is nothing but your book value of asset. So let us highlight this formula. What is the formula for book value of the asset? Total asset value minus depreciation. Okay, now let us go to our question. So first part of the machine is clear. Now next, what they're telling here, on 1st January 2019, 1/4 of the machinery was installed. On 1st January 2016 was sold at 10% less than book value. Nothing but depreciated value, 10% less than depreciated value. Again, what we have done, we have sold one more asset. Let us write down the date. Okay, so when did we sold first asset? We sold on 1st of July 2018. Okay, this was the date. We sold one asset on 1st of July 2008. One more asset we are selling on 1st of January 2019. So let me write here 1st of January 2019. One more we are asset we are get sold, but that is again 1/4. Okay, this asset what we are selling, okay, we sold one asset, that is also 1/4. So that becomes your second part of the asset. So that becomes your which part of the asset? Second part of the asset. So let me write down here 1/4. So 1/4, again if you calculate, 2 lakh rupees is the value into 1 divided by 4, again it will come 50,000. And remember, this is my second part of the asset. So what is the total cost? 2 lakh rupees. Okay, so let us do one working note here. 2 lakh rupees is the value. In that, two times we have divided the whole machinery into two part. First part is 50,000. Okay, second part is also 50,000, and the remaining will be how much? 1 lakh rupees. So this is the split of the first part of the machinery. So now we got to know what are the calculation has to be done. And then again, what we have done, 1/4 asset we have sold this one, which is 10% less at depreciated value. Okay, so now let us go and calculate our main working notes and machinery account. So what they're telling in the question here, prepare machinery account for 4 years from 2016 to 2019. Okay, so let us solve this problem now. And you can see here in between they have purchased some new machinery also. We also going to include on the same accounting year. So this is my first machinery account, and you can see here I have prepared the working note. Remember, we had a two part of the machinery and remaining and total, and we had total second machine and third machine. So first machine is nothing but this part 1, part 2 and remaining, and then second machine and third machine. Let us go and solve this problem now. So first what we are going to do, we are taking the cost of the asset. Okay, so let us write down the first part of the cost of the asset is 50,000, and second part of the asset is also how much? 50,000. And remaining, as I told you, remaining value of the asset is how much? 1 lakh rupees. Okay, so now if you take the total of this one, you must get how much? 2 lakh rupees. Okay, so let us write down here. Since we don't have second machine, I will make it nil here. So total value of the asset is how much? 2 lakh rupees. So now what we are going to do now here? Now we have purchased this asset. Okay, nothing but this is the cost of the asset. In the beginning of the year we have purchased. So cost first of, let us see the date, 1st of January 2016. So 1/1/2016. Okay. Now, beginning of the year asset has been purchased. So as we know, the rule of depreciation says that depreciation story starts with purchase of assets. So what we need to do, we have to minus depreciation, and that too at the rate of how much percent we have to charge depreciation? At the rate of 10%. And remember, this depreciation is for my first year depreciation. Okay. So this is my first year depreciation. I will extend the column here. Okay, so now let us start solving this one by one. So let us calculate on cost depreciation. So 50,000 is the total asset value. 10% depreciation if you take, it will come to 5,000 rupees. Here also it will come 5,000 rupees. Okay, and here it will come 1 lakh rupees. 10% if you take for 1 year. 1 year means, remember, we have to charge depreciation from 1st January till 31st of December. Okay, so I will just write down for your understanding here, 31st of December 2016. So this is the value. So depreciation, now let us calculate here. So for 1 lakh rupees, 10% is nothing but how much? Here it will come 10,000. So now let us take the total of this, how much it will come. So once we have to calculate the total. So it will come 20,000 rupees. Okay. So the total depreciation till now, it is nothing but how much rupees it's coming now? 20,000 rupees. So we got to know what is the value of the assets. Now let us calculate something called a written down value. How do we calculate written down value? Cost minus depreciation. Cost minus depreciation. So for written down value will be 45,000. Here it will come. Here also it will come 45,000. And 1 lakh minus 10,000, it will come how much? 90,000 rupees. And if you take the total here, 2 lakh minus 20 is nothing but how much? 1,80,000 rupees. Okay. So now immediately what are we going to do now? We are going to pass this entries. Okay. So remember, We are solving 2016. We are in 2016 year. So both the side will write 2016. And let us start with the 1st January. What happened in 1st January? We purchased the asset. So machinery account debit to cash or bank account. So LF will become nil. So if you see the total asset, how much is the value? Actually, we have 1 lakh 80 plus 10 plus 10. Total value of the asset is how much? 2 lakh rupees. So let us write down here 2 lakh rupees. Now, since we have charged the depreciation, we know we have to charge depreciation for December 31st of December every year. So what will come here? By depreciation, LF will become nil. Now, can you see here? Depreciation, how much we charge for the year? 20,000 rupees. Okay. So now I'm just going to write here, come to your machinery account and just write down here 20,000 rupees. So since 1st year is over, now let us close the books of account. 2 lakh rupees, both the side will come because it is the highest total debit side, 2 lakh rupees. So now I will make it bold here, this one. Okay, this one also I will make it bold. So 2 lakh minus 80,000, again December 31st. What will come here? By balance carried down. By balance carried down, and let us put in a star mark. Okay. So what is the balance carried down left now here? 1,80,000 rupees. So now we have at the end of the year also, can you see here? There is a balance of 1,80,000. So let us make it in a bold manner. I hope till here you are clear with this 1st year depreciation. Now let us go to the next year. Now 2016 we have charged, to make it bold here also, I will make it bold. So let us do here. Now next year immediately 2017. Remember we have to do from 2016 to 2019. So 2017 also, here also will come 2017. Okay, right. I will make it bold here also 2017. So now what I'm going to do now, last year closing 31st December closing will become next year opening balance. So what will be the next date? January 1st. So 1st January, what I will write here? To balance. Now this was carried down. Now we have to brought down the balance. Okay. What is the balance we have brought down here? Can you see here? There is 1,80,000. Now it will immediately come from credit side. It will come to which side? Debit side. So let us write down 1,80,000 rupees. Sorry, 1,80,000. Now, after this, what we are going to do now? We are going to charge the depreciation for the 2nd year, because remember our 3rd year transaction starts from, if you look at here, 2018 onwards. Now we are in 2017. Okay, our 3rd year 18 and 19, very important, the crucial, we have to look into that aspect. So now what I'm going to do here, let us go and do what we got some WDV also here. Okay, so this is my written down value for the 1st year. Now let us go and charge, since the asset is again going to belong for the 1 more year. So we don't have any other transaction like sale and all in the 2nd year also. What we're going to do, we are going to charge the depreciation once again at the rate of how much percent? So if you look at the question, they given at the rate of 10%. And remember, this 10% will be for now 31st of December. Okay, let us write down here 31st of December 2000 till 17, and this is my 2nd year of depreciation. 1st year is completed. Now we are going to charge the 2nd year of depreciation. So now again what I'm going to do on this asset, now we are following WDV method, so we have to charge depreciation on written down value method. So again completely on 45,000, 45, 90 and 1,80,000. So let us calculate depreciation. 10% of 45,000 is how much? 4,500. So let us write down here 4,500. Here also we'll write down 4,500, and here 90,000, 10% how much? 9,000. thousand rupees. So let us take the total now. So 1,80,000, 10% is nothing but 18,000. Okay. Now let us calculate the balance now. 45,000. We have to calculate now minus WDV minus depreciation. So what will be the value will come here? 40,000. If you minus 45,000 minus 4,500 is 40,500. Okay. And here also 40,500. And here what is the value will come? 81,000 rupees. And 1,80,000 minus, if you calculate 18,000, it will come 1,62,000 rupees. Perfect. So now this is called written down value. Okay. This is my written down value of the asset for the which year? Second year. Okay. Now let us go and pass the journal entries based on this one. So I will bold it. This is my second year written down value of the asset. Okay. So let us go here and write down. Remember, every year at the year ending, you have to pass the depreciation. So December 31st. What will come here? By depreciation. Okay. What is the depreciation value over here? Second year, what is the depreciation we got? Let us take the total and see here. What is the depreciation we got? Here, can you see here? 18,000. Okay. So second year depreciation value is 18. Okay. So let us calculate now the total value of the asset. Okay. So here it will come 18,000 rupees. So let us calculate the balance now. So now as we can see 1,80,000 is the total which is in the highest side. So let me write down here bold letter. Here also I will write down in bold. So if you calculate 1,80,000 minus 18,000, what is the total value of the balance left here? 1,62,000. And let us calculate now balance at the year end. So what will come here? By balance. Okay, just will keep it as it is. I'll make it bold. 1,62,000. So 2 years we have completed as of now. Okay, so now we are going to see for the next year. So we also got the balance 1,62,000 here, and here also 1,62,000. Let us go the next year. So now what I'm going to do, 2018 I'm going to solve. So here I will write here beginning 2018. Sorry, 2018. Here also will come 2018 because next year is the balance. And here what will come? January 1st to balance brought down 1,62,000. Done. Now let us go to the working note. Very important work, because working note plays a very important role here. Let us go now here. Okay. Yeah. So till now, second machine was not there. So balance is nothing is there in this. Now let us go for the third year. Let us show you the question. Now what is happened in this question? On 1st July 2018, as we can see, 1/4 of the machine was sold at 20% more than the book value. So we are sold 1/4 of the machine which is more than the book value of the asset. Okay, so now we are going to see sell which asset, particularly 1/4 of the book value of the asset. So now what we are going to do, till the sale of the asset, what we have to do, we have to charge the depreciation of the asset. Okay. So first what we are going to do now, let us write down. Okay. So this is the written down value. First, what we are going to do, on 1st of July 2018, we are selling one asset, but it is in middle of the year. Remember, our year starts from January 1st, and this is on the middle of the year. They are selling the asset. It means this asset must has used for the 6 month then. So what we'll do, first we'll charge the depreciation for the 6 months. So less depreciation. Okay, and remember this depreciation will be only for how many months? 6 months, starting from 1st of January. Okay, so if you can see my ledger account here, 1st of January 2018. Okay, so 1st of January 2018 to 1st of July, right? 2018. So I'll write here just 18 means, so 1st January to 1st July. Okay, because on 1st January July they have sold the asset. Which asset? The 1/4 of the first part of the asset. Okay, so now what we are going to do, we are going to charge depreciation again at the 10%. But if you see from 1st January to 1st July, it is coming for how many months? 6 months. So if you calculate 40,000, okay, so let us see now in the calculator. What is the value of the asset? Total is 40,500 into, we are calculating 10% depreciation value of this one. So let us calculate depreciation. It is into 6/12. So if you calculate the value, it will come 2025. 40,500 depreciation 10%. Okay. So if you calculate that value, it should come how much? 2025. So the total value of the asset, if you use and calculate here, it will come 2025. So only the first part of the asset. Okay. So now what I'm going to do now, second part is not there because first part of the asset is sold here. Second part is not available. Okay. The remaining also not there here. So what will happen? Value of the total is how much? Asset value is 1,62,000. From this 1,62,000, if you calculate 2025, now since it's a depreciation, value should come down. So what I will do here, I will just put in a bracket 2025 here. So if it put in a bracket, it will nothing but minus what we have to do here. So now let us calculate the value of the asset here. How much will come? So first part of the asset is 40,500 minus 2025. It will come 38,475 rupees. If you minus that one, and this will come how much? As usual, we have to calculate this one, 40,500 rupees. And here it will come how much? 81,000 rupees. Now, if you now remember, we are charged depreciation for the first asset for the 6 month. Means again, the value of the asset should come down by 6 month depreciation. So 1,62,000 minus 2025, if you calculate, just if you take in calculator, 1,62,000 minus 2025, it will come how much? 1,59,975. So now what is happening now? This is the cost, nothing but the written down value. Okay, the written down value. Now what they're telling, we are selling this asset. So sale is happening here. And remember, this sale is more than 20% of the book value. Greater than how much percent? 20%. So now we know, right? What is the book value of the first part of the asset is 38,475, right? So 40,500 minus, we have depreciation, we have charged for 6 months, that is 2025. Okay, now we are selling this asset at 20% more than the book value. So let us calculate here. What is the written down value of the asset here? 38,475. And we are going to sell it more than 20%. Okay, so we are going to sell it how much percent? 20% more than book value. So is equal, if you take it here, 38,475, okay, plus we 20%, it should increase here. So value of the asset will be 38,475 if you calculate the value, okay. So it will come 38,475 into 20% plus that 20% we have to add it, right? Then we will get the total value of 46,170. So the total value of the asset will be how much? 46,170. Okay, 46,170. Let us put in the value. Okay, 46,170 is the value of the asset now, after charging 20% more than the book value. So 46,170. Now you see the total value of the asset is how much? 38,475, and we are selling the asset which is nothing but at 46,170. So what happened now? We are selling more than the written down value. So whatever the difference is there, okay, if you see the difference between 46,170 minus 38,475, the difference is 7,695. This is nothing but my profit. So my profit, how much I am getting on this asset? 7,695. Okay. Now let us do in our working note. Okay. So we are selling, what is the value of the asset? We are selling at 46,170. This is the sale value of the asset. Remember, we are not going to sell second part of the asset. Third is also not there. Okay. Now, when we are selling the asset, my total value of the asset will come down. Okay. My total value of the asset will come down. So what we have to do now here, when sale means minus, right? So 46,170 rupees is the value of the asset. Okay. Which will come down. Now let us calculate now. As we know, book value of the asset is 38,475 and we sold at 46,170. So we got the total profit of how much? 7,695, which we have written here. So this is nothing but my profit on the sale. So now what is happening now? Let us calculate here also the value. 40,500. This will be as usual. This will be as usual 81,000. Now here what will happen? The value of the asset will come down by 46,170. Remember, this is minus. Sale means minus. Okay. So let us write down here. Sale means here what we have to do? Minus. Okay. We have sold means the total value of the asset will come down. So if 1,59,975 minus 46,170, if you calculate, what is the balance you are getting here? So 1,13,805. If you just calculate this value, you should get 1,13,805. So now what happened? Now we got 7,695 profit. Okay, let me put in a different color here. So we got profit. So profit means green. I will put in a profit 7,695. And now when we get the profit on any particular asset, remember, profit will increase your total balance. So if your sale you're doing minus, profit, it should increase your balance. So we will write here profit. Remember, profit we got on the first asset. Second asset will not come anything. Third remaining also not there. Now my total balance will increase by 7,695. Okay, so my total balance of the asset will increase by how much? 7,695. So if you calculate now, as we know, first asset is sold, second asset is as usual 40,500 is there, and this one is 81,000. Now let us take profit means add. My total balance should increase. So 1,13,805 plus 7,695. If you calculate, how much will come? 1,21,500. Okay, 1,21,500. Okay, so now this is the total value of the asset. Okay, till now. Okay, so what happened now? Remember, what was the story? First, we have charged the depreciation, okay, which is nothing but 6-month depreciation till the sale of asset is how much? 2025. So immediately what we should do, we should go to our ledger machinery account and let us write down here which date we sold the asset on July 1st. So till July 1st, what we'll do, we'll charge the depreciation for 6 months. Okay, so by depreciation, so here how much will come? 2025. Okay. Next, immediately what happened now? We have sold the asset. Remember, selling price is equal to cost price plus profit. Remember always, selling price is equal to what? Cost price plus profit. So now 1st July we charge the depreciation. Immediately what happened on 1st July, we have sold the asset also. When we are selling the asset, what will come? By cash or bank account. Okay, so by cash or bank account is there. So now what is the value of the asset which we sold? Let us see here. Can you see here, everyone? We sold the asset for 20% more than book value, which is nothing but 46,170. So let us write here 46,170 is the selling price. Now, then afterwards, what happened now? We have to charge the depreciation. Okay, but before that, very important, don't miss in the question. We got some value, written down value of the asset over here. And in the question, what they told here, on 1st July 2018, 1/4 of the machinery was sold at 20% more than the book value. But at the same time, another machine was purchased, which is 80,000 on the same date. So we have purchased another machine, which was how much? 80,000. Now remember, we got the profit also here. And we, after that, we purchased one asset also. Okay. Now what we are going to do, we have charged the depreciation for 6 months. We have sold the asset, and on this sale, we got the profit also. And on profit, when we got July 1st. So when we are getting the profit, what we should write? To profit or loss account. So let me write here like this, to P&L account. Okay, so to profit and loss account, how much we got the profit? 7695 rupees. So we got the profit of 7695. Immediately what happened? On the same date, we have purchased one more machinery, which was costing how much? 80,000. So 1st of July only. Okay, 1st of July, we have purchased one more asset, which is nothing but what will come? Entry to cash or bank account, which is costing how much rupees? 80,000 rupees. So now what I'm going to do now here, now you see, we had a total balance of 1,21,500, right? At the same time, what happened? We purchased one new machinery. So when new machinery is added in the business, so new machinery is purchased, right? What is first machinery? Remember, we sold, so nothing will come, first part of the machinery. Okay, so now here also nothing will come. Okay, second machinery also no changes. Now here I have made the column. You can see here second machinery we purchased, and this second machinery costing rupees how much? 80,000 rupees. Okay, so now what will happen? When new machinery comes, my total balance will increase by 80,000 rupees. Okay, so now if you take the written down value of all the asset, first asset, remember we sold here, so here nothing will come. Okay, so the second value, okay, here onwards, what will be the value now? 40,500. Here it will come 81,000. Now remember, in new machinery has been added in the business. Okay, so 1,21,000 plus 80,000, it's nothing but 15,000. 2 lakh, how much? 1,005, right? So now we got the business value also. Total value of the asset is nothing but how much now? 2,50,500, right? So now here also 80,000 is there in the business. Okay, so let us calculate now here also balance. Okay, so now we have to charge depreciation. Remember, we have not yet charged the depreciation. We have charged only for the 6 month on the sale of the asset. Okay, let us calculate now depreciation for the next year, that is for third year. Okay, so we know, right, we have to what? Minus depreciation, and depreciation at the rate of how much percent we have to charge? At the rate of 10%. Okay, so let us charge the depreciation at the rate of how much percent? 10%. And remember, this is for 2016 is over, 17 is over, 2018. Okay, till 31st December 2018. I'll close this one. Okay, so now remember, first part of the asset is sold. Now 40,500 we have to charge completely the total value of the asset, because first part is sold now here. So it will come 4050, and the second value of the asset will come full 10% we have to charge here, 8,100. Now here, if you see here, 80,000 is the value of the asset, right, which is purchased on the July 1st. Remember, if you calculate, okay, now just see in the question, another machine was purchased on 1st of July 2018, which was costing how much? 80,000 on the same date. Means we have purchased on 1st July, means from July to December. How many months we have to calculate? Because December 2018, right? Because we had started with our 1st July 2018. So means till December 2018, what is the value of this asset now? Okay. So now let us calculate the asset value. So total, if you calculate 80,000, 10% is 80,000. But now this particular asset is used for 6 months. So 80,000, 10% is 8,000. 6 months means it will be 4,000. So here the value of the asset will come how much? 4,000. Remember, this is 6 month we have used this asset. Now let us take the total of the all the depreciation, how much we charged. Okay, so 4,050, 8,100 plus 4,000. If you take the total depreciation will come how much? 16,150 rupees is the total depreciation we have charged on the remaining part of the asset as well as the new machine. So let us go and go back to our ledger account and just write down here December 31st. Remember, we are closing balance. We have to calculate here by balance carried down. So here, sorry, by depreciation, we have to write here first, then we will calculate the balance. So by depreciation, how much depreciation we have charged till now? Okay, let us see here. Total depreciation is the third year. 16,150. So total depreciation, if you see here, it is 16,150 rupees. So let me write down here. 16,150 rupees is the depreciation. Now, if you calculate now, what is the return now? Cost is there, WDV minus depreciation. Let us calculate the written down value of each asset. So this is 36,450. If you minus now here, this is 72,900, and 80,000 minus 4,000 is how much here? 76,000 rupees. And the total value of the asset 1,500 minus 16,150. If you take it here, it will come 1,85,350 rupees. Okay, so this is the balance which is left, and this is nothing but again written down value at the end of the 4th year. So let us calculate now here. So what is the total value of the asset now here? If you take the total here, you should get 1,62,000 plus 7695 plus 80,000. The total value of the asset is 2,49,695. Okay, here also will come the same. Okay, let me bold here. 2,49,695. Now let us calculate the balance on December 31st by balance carried down. So 2,49,695 minus, if you take 2025 minus 46,170 minus 16,150, you will get the total balance of 1,85,350. So this is the balance which is equivalent to this balance. So we can see here this balance equivalent to this balance. Okay, so this is the balance we got here, asset value. Okay, here first remember you got 1,62,000. So let me bold this one, written down value of the asset. Okay, so let us further go to the last year of the asset. So now we are going to the last year. This is the end of the problem year. So let me make it to some box here, and this is the balance carried down. Now 2019. Okay, let us go to the last year, 2019. So what will come here in the beginning of the asset value? Okay, we have to brought down first here. So 1st January to balance brought down. How much balance? Remember, balance carried forward down is 1,85,350. Here it is also the same balance, 1,85,350 rupees. Let us go on to the question. I'll just further, I will extend this column because few more calculation will come. Okay. Let us go on to the next. Next, what happened on 1st January 2019, 1/4 of the machinery installed on 1st January 2016 was sold at 10% less than its depreciated value. Remember, again, they sold at 10% less than its depreciated value. And the same time, another machine was purchased on 1st January 2019 for rupees 1 lakh. Okay, so we have sold also and we have purchased also. So let us go to our working note. Okay, so now what happened? Now we are selling the second part of the asset, which is once again the second part, but purchased on 1st January itself. So written down value. And now if you see here, we are selling this asset on 1st January 2019 itself. Means at the beginning of the year itself we are selling. It means it has been charged already the depreciation over here. But now in what they're telling here is we have to sell this asset, but at what? 10% less than its depreciated value. 10% less than its what? Depreciated value. So now let us do the calculation. First, remember, we are selling the second part of the asset. Now, what is the balance left? Second part of the asset is 36,450. Okay. Now, 36,450 is the written down value. Once again, that is nothing but my cost. 36,450. Now, this 36,450 is nothing but 10% less than the book value of the asset, right? That is what they told here. It means it should come somewhere 3645 is the loss. Okay, 3645 if you convert into this total value 3645. Okay, so now the total value of the loss, it's nothing but 3645. Okay, so 3645. Okay, now 36450 is the total asset value. So it means what? If you calculate the value of the asset over here, 36,450, okay, is the value. On that 10%, when we calculated, we got 3645, 10% less than its book value. So it means what? 36,450, okay, minus 3645, which is nothing but the 10% of the total value of the asset. So it is coming 32,805. Okay, 33,805 is the sale value now. So it means book value of the asset is 36,450. Sale value of the asset is 32,805. Means if you calculate over here, we sold at this price. Okay, but the cost of the asset is how much? 36,450. Means there is some kind of a loss. Which, what is the loss? Minus 3645. So we sold at a loss. Okay, so now let us go here. First, what we are going to do? Sale. What is the sale price? You can see here 32,805, 10% less than its depreciated value. So sale value is nothing but 32,805. Okay, now we got to know this is the sale value. And on this sale, what we got? Loss. There is a loss of how much rupees? 3645. So let me write down here. Loss means I will put in a red color. Okay, So in the first year, we got some profit. Remember, we got 7695 profit in the asset at the first time, and here we are getting the loss. So now what is happening when we are selling the asset? We are selling the second part of the asset. So, right, the remaining balance will not affect anything. But on my total asset, this is the total value. 32,805 will be the value will come down. Okay, so let me minus also. When sale is there, immediately you have to minus from the total asset. Okay, so now if you take this 1,85,350 minus, we got 32,805 is the sale. So we have left with 1,52,545 rupees, right? So in this case, we are not selling the remaining balance. 70,900 will come as usual. And here we are not selling the second machine. So this will be remain as it is, right? So it will come 76,000 rupees. Okay. So now we got to know what is the values of each one. And based on this one, we have to calculate the value, written down value. Okay. So now what we'll do now here, we'll immediately go back, okay, to our ledger account. And what we are going to do now here, remember, and January 1st itself, I'm selling my asset. So when we are selling the asset, what will be the journal entry? By cash or bank account. What is the sale of the asset? 32,805. Remember, you can see here, there is a sale, which is nothing but 10% less than depreciated value. So you can see here 10% less than the depreciated value. So let us go now. Now what happened now? When we sold this asset, we got the loss. That loss is also on the 1st January itself. Okay. So now when we are getting loss means what will come? Profit and loss account, or we can say by loss on sale of machinery. But nothing but you have to sell and then check profit and loss. But loss or profit, whatever is there, you should transfer to P&L account. So we got loss of how much? 3645 rupees. Okay, I told you, remember in the beginning, selling price is equal to cost price plus profit, right? It may be sometime profit or it may be sometime loss. So we got a loss, right? So now how much is the loss? 3645, right, is the loss. So now when loss is there, our asset total value will come down. So remember, if a profit is there, we have to add, and when loss is there, my value of the asset will come down. Okay, so 70,900 is not there. Total value will come down by 3645 rupees. Okay, so your third asset is not there. So here what we are going to do now, we're going to deduct the total value of the asset from this one. So let us calculate the total balance left. Okay, so we don't have this one. Second part is also not there. So 1,52,545 minus 3645. If you calculate, it will come how much? Okay, 1 second. Here it will come, the total value of the asset will come 1,48,900. So here what is the value of the asset? Written down value is 72,900, and here it will come 76,000 rupees, right? So now because there is no sale here, there is a nil in the second machine which we purchased here. So now let us calculate the depreciation as well as the total value of the asset. We got to know now. Okay, so this is my written down value of the asset. On this written down value of the asset, okay, now remember, at the same year, we also purchased one more machinery for rupees how much? 1 lakh rupees. You can see here, there is a same machinery was purchased of rupees how much? 1 lakh rupees. So now what we are going to do now, that is nothing but my third machine. So I have prepared already where column here, the third machine is purchase of 1 lakh rupees. Okay, so now third machine came, which is costing how much? 1 lakh rupees. So let us go and add your new machinery in the business came now. Okay, new machinery, right? First machine will not have any impact, second is not there, and total value also will increase by rupees how much? 1 lakh rupees. So this is not there, and 1 lakh rupees already I have added here. So it means the total value of the asset is now 1,48,900 plus 1 lakh rupees. It will come 2,48,900 rupees. And here, what is the value of the asset? 72,900. And here it will come 76,000. And here it will come 1 lakh rupees. So this is the final written down value of the asset. Okay, this is the final written down value of the asset. So in my business, now the total value is how much? 2,48,900. So now immediately we'll go to our ledger account. Okay, and just write down here. First we have balance brought down, and immediately on January 1st itself, I purchased one more asset in my business. So to cash or bank, which is nothing but how much? 1 lakh rupees of asset we have purchased, right? So now what we are going to do now, we are going to calculate the depreciation. Remember last year we have to charge depreciation or not? Yes, we have to charge the depreciation. So less what I'm going to do, depreciation. Now let us going to charge 10% for the whole year. Nothing but I'm charging depreciation from first, okay, 1/1/2019 to 31st of December 2019. This is the depreciation for the last year. Okay, so now let us go and charge the depreciation. First is not there, second part is not there, the third part of the asset. Now let us calculate 10% for whole 1 year over the year, the asset. Okay, so what is the value of the assets here? If you see here, remaining value of the asset is 72,900. On this, we are going to charge 10%. If you calculate 72,900, the value of depreciation will come 7,290. And here 76,000 10% will come 7,600, and 1 lakh 10% will come how much rupees? 10,000, because beginning of the year itself it got purchased. Now if you take the total of the depreciation, 7,290 plus 7,600 plus 10,000, the total depreciation will come 24,890 rupees. This is the total depreciation value. Okay, so there again, what we have to do now, calculate the return on value. But before that, we'll post this depreciation amount in our ledger. Okay, let us go to the ledger account. And remember, this is my year ending December 31st. So I'm going to write here by depreciation. How much is the depreciation value we got over here? So if you see here, 24,890 rupees. Okay, this value we have to write down in the ledger account of machinery. So let us write down here 24,890 rupees. So now let us see whether the total is getting matching or not at last. Okay, so now what we will calculate, again cost minus depreciation, again written down value will come at the last year. Okay, second, now let us take the total. This was the before depreciation, and we charge depreciation, and now I'm going to calculate the final total balance. So let us now calculate. 72,900 minus 7,290, it will come 65,610. Just minus one by one. Okay, last I will take the total balance. 76,000 minus 7,600 is, it will come 68,400. And 1 lakh minus 10,000 is nothing but 90,000. Take the total of all this one. So if you take 2,48,900 minus 24,890 also, or if you take 65,610 plus 68,400 plus 90,000, the total will come 2,24,010 rupees. 2,24,010 rupees is the final total we are arriving. So here also we should get the same balance on this particular last year 2019. So 31st December by balance carried down. Okay, but before that we will take the total. Okay, what is the total of this one? That is 1 lakh plus 1,85,350 is 2,85,350. Here also 2,85,350. So debit side is highest, And if you calculate by balance brought down, it will come 2,24,010 rupees. So this is the closing balance and this is the closing balance. Both the totals are simultaneously, it should match what you are getting at working note and what you are getting at the ledger balance. So this is my final total. Let me put into the green. So this is the final answer of your question number 10 university problem in MBA managerial accounting, right? So just practice this one. Okay, you can watch this one, can understand, right? So thank you so much for listening the class. Thank you.